Welcome to the Blockchain Bulletin Unchained, a series where I will be speaking to professionals and leaders from the industry to get to the heart of the latest developing news stories and overarching topics shaping this ever evolving industry. Our first guest is Kirsteen Harrison, Sustainability Director for UK digital asset company Zumo, but has been an environmental consultant for several companies over the past 20 years. In this episode, we'll be diving into a subject not often discussed within the industry and arguably should be more, and that is sustainability. Myself and Kirsteen will be discussing the environmental impact of crypto mining, some of the regulatory sustainability guidelines already in place for companies to follow, and what your role as a company can play in the future of sustainability. But firstly, Kirsteen, thank you so much for being our first guest on Blockchain Bulletin Unchained. How are you today?
I'm great, and thanks very much for having me on. I'm excited to have this conversation.
Yes, likewise. It's like I said at the top there, it's a topic that's probably not discussed as much in the blockchain industry and I mean even wider financial services as well. So firstly, Kirsteen, could you just provide some background on the amount of carbon emissions emitted from mining crypto, like predominantly Bitcoin, right? And maybe other digital assets?
Yeah, absolutely. Of course I can. But before I do it, I actually think it's useful to provide a little bit of context here, because I think sometimes when we start throwing about big numbers, like big numbers associated with carbon emissions or electricity consumption, it's quite easy to take those numbers out of context. So what I'd like to do before we start going into that is maybe provide a little bit of background information and context on it. So I guess the first thing to say is cryptocurrency is often associated with high electricity use and big carbon emissions. And I think that's probably an unfair brush to tar the digital assets or cryptocurrency sector with in general, because probably about 80% of electricity consumption is all down to Bitcoin. So when I talk about this, I'll have to single out Bitcoin from everything else, because it really is so much more significant than anything else. And the other thing is that we have a bit of a tendency to conflate electricity consumption with carbon emissions, and the two are absolutely not the same. With electricity consumption, it's actually quite easy to measure or at least model electricity consumption within cryptocurrency, and we can come up with some quite good figures for that. When we look at carbon emissions, you need to convert that electricity consumption into what the climate impact is, and that depends on the electricity mix that's being used. So whether it's renewables or whether it's from some kind of fossil fuel sources. So it's quite easy to give good figures on electricity consumption for crypto. And just to kind of start that off, Bitcoin is probably responsible for something between 0.5% and 1% of total global electricity consumption. I think at the moment it's at about 0.7%. Now, I know it sounds like a small part of a percentage, but actually, as an amount of electricity, that is quite a lot. So to say that as a sector, Bitcoin is responsible for almost 1% of all global electricity consumption, that being all the electric cars globally, all the industry globally, businesses, everything, electricity is going to be fairly significant. But then, for all the reasons that I've just said, when you look to convert that into a carbon figure, there's a lot more work that needs to go into it. So where are we getting this electricity from? What countries are we using it in? And different surveys will come up with different answers. But actually, one of the most recent ones was done by the University of Cambridge, who do a lot of work on Bitcoin electricity consumption. And it was about a year ago now, they looked at this, they did a big survey of miners. And what they found is that about 42% of the electricity consumption is from renewables, about 10% is nuclear, which is actually classed as kind of clean energy too. So 52% of the electricity is renewable, the rest is oil and gas. And what that means is that the carbon emissions from Bitcoin are something like 40 megatons of CO2. So that's a big number. And it's a much smaller big number than it was a couple of years ago when we were using less renewable electricity. So I mean, I think in summary, we can throw about big numbers, and nobody quite knows what they are. Nobody quite knows what a terawatt of electricity relates to. But in general, we're a big electricity user. The carbon footprint appears to be coming down in relation to the amount of electricity that we're using, which is a very, very good thing. But there's still quite a lot of work to do as a sector.
Yeah, some of those numbers and figures there are actually quite striking, especially when it's 1% of all global electricity. it's something that is really eye catching, and maybe something that I can ask you next, please, Kirsteen, is how does the digital asset sector's environmental impact compared to some of the other industries, maybe like the wider financial services and maybe other industries not related to payments and digital assets?
Yeah, that's a really good question, and it's sometimes quite difficult to compare. I will do my best, but again, a little bit of context might be quite useful because, as you said at the beginning, I think when you introduced me, you said I work across different sectors, I work with different kinds of businesses. And one of the things that's always really interested me about crypto and digital assets is electricity really is our sole input. Electricity is the biggest environmental impact that we have. It's the key input, and it's the thing that we measure our entire carbon footprint on as a sector. Everything else is not particularly material. So that makes it quite different from a lot of other sectors. I mean, tech in general, obviously, is a user of electricity, but you look at other industry sectors out there, I don't know, chemicals, aviation, transport, they're not comparable. And there's a couple of other things about crypto that make us quite interesting. Proof of work has thrown out there something that never ever existed before, this idea of a completely decentralized network, but which players within can never be completely autonomous in terms of their electricity consumption, because it's the activities of everybody else in the network that impacts the electricity consumption of individuals. So that is a very, very kind of new concept here. And also the fact that cryptocurrencies, or at least Bitcoin, is entirely fungible. And that means that we can't have traditional supply chain engagement strategies that you would in other sectors. So there's quite a lot about us that makes us unique. I think that makes us quite exciting. We need to learn to do things slightly differently. And it's worth bearing those things in mind when you look at comparing us with other sectors as well. The thing I missed out of that, of course, is that we're quite new, we're quite agile, we're really good at being entrepreneurial, we're really good at building things, we're really good at finding new ways of doing things. And most industry sectors have been around for quite a long time, right? So they're not quite as agile and able to do new things as us. That kind of leads us into, you kind of asked as part of your question about traditional finance and how do we compare to traditional finance. It's a really, really interesting one to look at, because over the years, I've read a lot of blogs and research articles and things about how cryptocurrency and traditional finance compare. And a lot of them will look at things like the carbon footprint of having an office building and heating that office building and having people working in a bank. It completely misses the point, because of course there's a carbon footprint associated with that. But actually within traditional finance, it's how investments are made and how lending is done and how that money is used where the real carbon footprint comes in. So for example, if a bank is investing in oil and gas, or if a bank is investing in chemical industry or something like that, then the carbon footprint of that investment is what's called their financed emissions. And that is a very hazy and quite hard to measure and also quite easy to hide part of carbon footprint. So I think the summary of what I'm saying there is we've got a big number that's very easy to point a finger at in terms of our carbon footprint and our electricity consumption, because it's quite easy to measure. And other industries do not, and it's a lot hazier and it's a lot harder to measure. And that does not mean that it's less significant than ours. In fact, traditional finance, when you look at financed emissions, it's multiple times the carbon footprint of big economies. But before I came on this call, I thought I just want something really relatable to people in the UK as well, to be able to say, what does this carbon footprint of Bitcoin mean? And I was looking at different industry sectors in the UK, and I found that the carbon footprint I just gave you of Bitcoin, which is about 40 megatons per year, is about half the emissions from the UK transport sector on an annual basis. So it's a really, really big number, but we're not looking kind of across multiple geographies. It's half the transport sector of the UK, I would say, is a pretty big number in terms of carbon footprint. But it begins to give a little bit more context, I guess, as to what these big numbers and what's a megaton of carbon. It begins to put it
Yeah.
in context a little bit.
Yeah, it does. It does kind of provide that big picture to many people that probably tuning in that don't really know the kind of like size and scale of some of the carbon and also electricity emissions being emitted from mining and obviously the sector's general overall operation. But I think it's fair to say also that there has been a lot of governance and initiatives happening at the moment around sustainability. Obviously, there's ESG reporting now, and I think there's a lot more light that's being shone upon sustainability programs. But just want to ask you, Kirsteen, what have been some of the what have been some of the companies' reactions? I know you've worked with quite a lot over the past couple of years. What are some of their what have you seen from companies doing in reaction to some of the geopolitical activities? I know we're not going to chat too much about Trump and his Paris Agreement and all that, but I know there is there's a slight shift in the EU omnibus, if I'm not mistaken.
Yeah, I mean, I think, the summary here is that we have been on an upwards curve in terms of sustainability and the importance of sustainability, and the EU putting in place some really progressive disclosure requirements for companies on sustainability. And we are now, perhaps, there's been a bit of a peak and we're perhaps in a little bit of a trough. I think it might be fair to say globally in terms of geopolitical situation and kind of backlash against ESG in America and things like that. Um, Before I dive into that, again, to me, context is everything, because if you look at sustainability since it really became something that was kind of in our consciousness, which was probably about the 1960s, it has always followed these peaks and troughs. There's always been an upwards, maybe an event, Chernobyl, Bhopal, something like that has happened that's really caused a big sense of urgency in terms of environmental sustainability. There's been a huge surge in interest, activity, embedding, and then perhaps it moves too quickly. Perhaps some people feel left behind. Perhaps it begins to scare people. Then we hit a bit of a trough, and we are hitting a bit of a trough at the moment. The really good news from that is that no trough has ever gone deeper than the upwards curve. So whenever we go on an upwards curve again, it will always take us to a more progressive point than when we're in a trough. So I think that's really, really important to hold. But I think, to your point, certainly there's some geopolitical pressures at the moment in terms of sustainability and ESG reporting. I think it's probably fair to say that companies that are either based in the US or have a significant presence in the US not only are not feeling the pressure to keep up the work on sustainability, but in some cases are feeling pressure to actually pedal back on it. Um, I remain pretty optimistic, because actually what I have seen, both through my work at Zumo, working with companies within the blockchain space, and also the work I do outside of Zumo, working with companies in other sectors, is that actually for companies that are still progressive in sustainability, they're just finding cleverer ways to talk about it. So rather than talk about sustainability, they might talk about future profitability. Rather than talk about ED&I, they might be talking about protecting our workforce. And rather than talking about climate change, and this is my favorite one, rather than talking about climate change, they might be talking about protecting Americans from bad weather. So there are lots of other ways to do what needs to be done and say what needs to be said without using words that might be triggering in a geopolitical sense. And that is what I see through the businesses that I engage with and the businesses that I work with. You mentioned as part of your question about the EU omnibus, and without getting too technical about it, basically the EU has always been super progressive in terms of sustainability requirements and sustainability disclosures. What happened a couple of years ago is they launched this piece of work, which is the omnibus, to review all the sustainability legislation and requirements that were out there. And the upshot of the omnibus is some of that has been scaled back. And there's two different ways to see that. One is, are we rolling back on sustainability? And that would be a negative thing. I think the answer to that is not a clear yes. The other is, did we move too fast in the first place to keep businesses on board? And I think probably the answer to that is partially yes. And maybe there was a bit of a need to slow it down and perhaps have a bit more of a level playing field for everybody to catch up. So I don't see geopolitical situation in the US and EU omnibus being part of the same thing. I think they're slightly different, and it's perhaps unfortunate that they've been connected in some way, or it's looking like the EU is kind of reacting in that way to presidency in the US that is not supportive of ESG principles. But yeah, that's a kind of short summary of quite a complex situation.
Yeah,
Yeah.
it definitely relates back to, obviously, Europe, obviously acting on its own accord, the EU and the European Central Bank, when it pertains to developing its own regulatory framework with MiCA, the Markets in Crypto Assets regulation, and obviously now the US are rolling out the US Genius Act and still arguing about the US Clarity Act at the moment. But I mean, I think the EU was quite forward thinking because it was the first major market, I want to say, that introduced a crypto framework for regulation and guidelines, and within those guidelines were sustainability provisions and within the framework. So, Kirsteen, I know you obviously know MiCA quite well and some of the sustainability provisions. Could you just outline what some of these sustainability provisions that mean for companies trying to comply with MiCA?
Yeah, absolutely. I mean, so at Zumo, we were quite involved in, I wouldn't say the development of this, but we were involved in all the consultation process through it and actually engaged quite heavily with the regulators, ESMA and the EU as part of this. And so we were quite close to the process and we saw a lot of how it was evolving and what some of the pain points were in the development. I think, the MiCA regulation obviously is much, much bigger than sustainability. It covers many different facets of crypto assets. But what's really interesting about it is sustainability has been brought in, if you like, vertically as part of a specific financial regulation. And sustainability has kind of been brought into that and slightly bolted onto it. Now, going back to what we've just said about the EU, what you normally find with sustainability disclosures is it's what's called horizontal regulation. So it means that the regulation will be sector agnostic. There might be specific requirements for some sectors in there, but in generally it's going to be sector agnostic. And then the requirements themselves are what comes in the regulation. And the advantage of that approach is you can have a very kind of sustainability centric view. So you can really understand what is the outcomes that you're trying to achieve from that regulation. What's quite interesting about MiCA is they obviously took the opportunity, putting in a bit of financial regulation to make sure that sustainability was part of that. And that has come with both opportunities and problems. Opportunities in that it's interesting to see, might this be the case in other kind of industry-specific bits of legislation or financial legislation? I think we've yet to see if that's the case. But it has come with problems in that, well, what's the intended outcome? It's not entirely clear. So because of that, um, I think there's two elements of it. The compliance bit itself is quite easy, and I'm going to talk about what companies need to do to comply because that really is the important thing for people to know. So the compliance bit is quite easy, but it does leave sustainability professionals like me with a little bit of a question as to, well, what good are we doing here and what are we trying to achieve? Because I think from what the requirements are to where we need to get to actually move the sector forward, there doesn't appear to be a clear line there that I can see. But if we just talk about what those requirements are, firstly, within the sustainability requirements of MiCA, it targets two key audiences. So token issuers, and they need to have a white paper, and sustainability metrics need to be within that white paper, and there's kind of clear templates and guidelines that they need to follow. And the other is CASPs, so crypto asset service providers, and they must provide publicly available sustainability metrics on the crypto assets that they list. And so that's the requirements on both of them. But there's a few differences in terms of how sustainability disclosures would normally be done. So normally, when we're looking at a company or an entity disclosing on their sustainability performance, you do that within the kind of boundaries of that company and what are the products and services we provide, and that's what you provide your disclosure on. But what MiCA does in all cases is it requires the disclosures to be about that network. So if you're providing sustainability disclosures on Ethereum or Polygon or Bitcoin or whatever the thing is, you provide the metrics on the entire electricity consumption and carbon footprint of that crypto asset, not what my share of it is as an exchange, but the entire thing, which essentially means that different crypto asset service providers will all be providing the same number, regardless of whether they are taking sustainability action themselves or not, or regardless whether they are very, very small or very, very large. So that is perhaps slightly different about MiCA than other sustainability disclosures might be. The other thing about MiCA is there is no de minimis as such. So often with sustainability, we talk about materiality and we report on things that are most material, so i.e. the most important or the biggest. But there isn't that. We need to report all the electricity consumption for all crypto assets, even if it's really, really small. And there are, if it's below a certain amount, you don't need to report as many numbers, but you still need to report the electricity consumption. Now, within Zumo, we provide this to our clients, so we can support companies in both developing the white papers and providing the sustainability data that's needed for that. And we've seen some really interesting cases of a lot of this sustainability data being quite small numbers. So an example that I've cited before was a blockchain that we'd worked with. And actually, when you look at the number for electricity consumption, it was probably the electricity consumption of a small village. It was probably several thousand kilowatt hours, but that
Yeah.
in itself doesn't mean anything. That's not a big number. That's like boiling a kettle a few times. So proportionality here is interesting. Anybody with any blockchains will need to be reporting this number, whether it's a very big number or a very small number. And again, that makes it perhaps slightly different from other sustainability requirements.
Yeah, no, that's really interesting, and I think also, like you said there, with Zumo is obviously doing its part, and I know you have the oxygen product as well that can calculate some of these emissions designed for MiCA sustainability. But there's also been quite more industry-wide discussions around sustainability and actual actions. I know one of the biggest ones was Ethereum moving to from proof of work to, was it proof of stake?
Proof of
And
stake, yeah.
this would have reduced its electricity consumption to about 99%, right? So, yeah, Kirsteen, I just wanted to also understand any government or industry-wide discussions happening in recent years, like the Ethereum merge, that have supported, I guess, the movement of sustainability within the industry.
Well, I mean, the merge was probably the most exciting of all of them. So it's
Yeah.
probably worth just spending a minute on that, because the day that happened was super exciting. Yeah. So Ethereum used to operate on proof of work, which tends to be much more electricity intensive than any of the other consensus mechanisms. And it was moved basically overnight to a completely different consensus mechanism, proof of stake. And what that meant is that overnight, the electricity consumption of that blockchain was reduced by way over 99%. It was like 99.8% or something like that. And the electricity consumption of Ethereum is now fairly insignificant. I never like to use the term insignificant, but it is really not significant. When we spoke about Bitcoin and Bitcoin electricity consumption being similar to that of kind of certain smaller countries. Ethereum is just nowhere even near that. So it was super exciting, but it is just worth noting on the merge that there was specific things in place that allowed that to happen that probably would not allow it to happen for other blockchains. So after the merge, there was quite a lot of talk about Bitcoin, and I think there were some NGOs that were really pushing the sector to do something similar for Bitcoin. But with Ethereum, it was there was a foundation, there were founders who were very clearly associated with their kind of leadership in Ethereum and who were able to bring together a community to make that happen. And Bitcoin has been very intentionally brought about in a way that will not allow that to happen. There is no central foundation. There is no leader or kind of founding person that can make all this happen. The whole idea is that it's a decentralized network. So the Ethereum merge was amazing, but it's not necessarily a sign of things to come. I think it was a really great event that happened, and it probably isn't going to be the way that Bitcoin is able to go, even if there was a core of people that were wanting it to go. So with that in mind, what other innovation have we seen? And I think maybe when I spoke about the beginning and I spoke about the proportion of renewable electricity, I can't remember if I said or not, but basically when the same survey was done about 3 years ago, I think Bitcoin was on about 30% renewables, and now it's on about 50%, or at least sustainable energy, which includes nuclear. So we know that the amount of renewables in the Bitcoin network is steadily increasing, and that is likely to continue. And part of the reason for that is because there has been a lot of innovation in the way that Bitcoin is mined. So there's been a lot of use of curtailed renewables. So what happens when renewables are built and there's too much capacity at the time because they haven't yet got all the grid connections they need, or they haven't yet got the requirement for electricity in the area where they've been built. And Bitcoin mining, we know, has been used very, very successfully in those areas to make use of curtailed renewables, stranded renewables, and also with methane from landfill sites and from oil and gas mining as well, that actually methane can be used to mine Bitcoin. And that's fantastic because methane is actually a much more potent greenhouse gas than in carbon dioxide. So we know that there's been a huge amount of innovation. There's been a lot of really good work with grid balancing as well, especially in the state of Texas, where Bitcoin miners have been paid to power up and down depending on what else is required in the grid, and it can be used for grid balancing. My caveat to this, and I think this is a big caveat, is at the moment I'm only seeing that as a collection of good case studies. We know it's happening. We hear the really, really good case studies, and we hear the more progressive mining companies talking about it a lot. We know that it's happening because we can see that figure, that proportion of renewables going up. So there is really, really good stuff happening. My challenge back to the industry is we say a lot that we are one of the biggest users of renewable electricity, and I think we are. We're using, I think it's 52% sustainable electricity, 38% renewables. That's pretty good compared to any other sector, but we can do much, much better. And the caveat to all of this is if we're only using 52% sustainable energy, then what about the other 48%? Because by default, if you put 52% in a bucket that's labeled sustainable, then the rest of it is going to be in a bucket that's labeled unsustainable, right? So yes, we're doing really good things. Yes, we've done those things really, really quickly. And we now have evidence to say as a sector that we are doing them. And I have no doubt, given the speed that things happen in this sector, that we will continue to do things very, very well. But we're not ready to pat ourselves on the back yet, because we're
Yeah.
not using, we are a sector that works only with electricity, and we know how to do electricity with renewables. And if we are still using 48% that we cannot put in a bucket called sustainable, then we still have some way to go, although I'm really, really pleased with the speed that we have been moving at in recent years.
Yeah, I mean that's a really good call to action, I would say, to the industry there, Kirsteen. I think that, like you said, the industry is still so young. It's still in its relative infancy, and I think the way the speed that at which this industry evolves and constantly innovates is something that I think, would you believe now that is maybe some more of that innovation can happen for sustainability, just to round things off here.
Yeah, absolutely. I mean, I've made the point before. One of the things I love about this sector is the entrepreneurial spirit, the speed at which we can move, the speed at which whole new sectors within a sector evolve. We can do things really, really quickly. And if we can harness that as a sector to move things along even more quickly in terms of sustainability, then we can really show leadership. I don't think we're quite showing leadership yet. We are showing innovation, and there are really good things that are happening. But we really have the potential to hold our hands up as a sector and say, look how we're leading the way and showing how this can be done. And I would love to see us doing, I think we've got the capacity to do it over the next few years. I would love to see us able to do that perhaps more than we are at the moment. And I would also love to see those that are intermediaries. So if you're a crypto validator or mining company, then you're much closer to that source of electricity, if you like. Perhaps there's more autonomy there to make decisions about it. I think perhaps those of us who are in the middle, as Zumo is, we're a company that kind of operates within the crypto sector, but we don't engage in mining and validation. There's many other similar companies like us, and there's a lot that we can do as companies as well, not just in the way that we work with blockchains and perhaps procure renewable electricity on behalf of those blockchains, which is what we do at Zumo and what we enable through Oxygen, but also how we operate our companies and how we align them with sustainability principles. And I think there's probably a lot more of that we can do in the sector too. So very excited to see where it goes in the next few years.
Yeah, it's no doubt something that we'll be keeping an eye out on the Blockchain Bulletin and on Payment Expert. But Kirsteen, thank you so much for your time and all the best for the future. Thank you.
Thank you so much. Really enjoyed it. Thank you.